If you have been following the stock market in the recent months, you know how volatile it is. Last week, Facebook or Meta set the record for losing over $230 billion of market cap in a single day, while Amazon set the record for gaining $191 billion also in a single session. So, if you're looking to invest or expand your portfolio in these crazy times, your best option is to invest in ETFs. That way, you can minimize volatility and maximize growth. In this video, we'll discuss the top 5 ETFs that you should invest in for this year. So let's get started. The first ETF on this list is the Invesco Triple Q. Triple Q is one of the most actively traded ETFs in the world with a very simple approach. It tracks 103 tech-focused growth companies listed on the Nasdaq exchange. This ETF's 5-year performance is astonishing with 175% gains, which averages to about 35% annually. It has $190 billion of assets under management. It yields a PE ratio of 36, and its expense ratio is only 0.2%. And finally, this ETF has been down 14% year to date, which is a good entry point if you're trying to get in right now. Now let's talk about its top holdings. Since this ETF is focused on technology and growth, it should come as no surprise that the top holdings include Apple, Microsoft, Google, and Amazon. What's interesting is that the top 10 holdings make up 50% of this fund. This ETF is a good choice for investors looking for a tech-focused fund with a balance of growth and stability. The second one on this list is the Vanguard Total Stock Market ETF, or VTI. VTI tracks over 4,000 companies across a wide spectrum of industries, including technology, healthcare, energy, industrials, real estate, financial services, and more. It has $285 billion of assets under management, and for being a diversified and stable fund, its 5-year performance is quite impressive with a gain of 88%. Its expense ratio of 0.03% makes it an attractive choice for large investments. Now let's talk about its top holdings. So just like the Nasdaq 100, VTI's top holdings also include Apple, Microsoft, Amazon, and Google. But what makes it different is that the top 10 holdings only make up 24% of the fund. So VTI is a good choice for investors looking for a diverse and well-balanced fund with a healthy mixture of small, medium, and large cap stocks. The third one on this list is the Schwab US Dividend Equity ETF, or SEHD. SEHD has an interesting strategy of only including firms with a 10-year history of paying dividends. So with $32 billion of assets under management, this fund focuses on 105 quality companies that yield sustainable dividends. The diversification of this fund makes it an attractive choice for investors looking for a stable, income-oriented fund because individual securities are capped at 4% and sectors are capped at 25%. This means that no single company can hold more than 4% of this fund, and a sector such as technology can't make up more than 25% of the fund. While small-cap technology and growth stocks suffered in 2021, this fund gained an impressive 25%. And over the 5 years, it gained about 80%. Its top holdings include Coca-Cola, Merck, Verizon, Amgen, Pfizer, Broadcom, and many more. These are all old companies with strong fundamentals and solid financials. So SEHD is a good choice for investors looking for a stable and dividend-driven ETF for their portfolio. The fourth one on this list is the ARK Innovation Etf, or ARKK. ARK is one of the funds by Cathie Wood's ARK Invest company. It focuses on long-term growth companies that are involved with cutting-edge innovation across technology, healthcare, communications, and more. So this fund is actively managed right now and currently holds 45 companies with $12 billion of assets under management and a slightly high expense ratio of 0.75%. After the stock market crash of March 2020, this ETF skyrocketed and saw an astonishing 300% growth. But after peaking in February of last year, it has been on a decline and has lost over 50% of its gains. Its top holdings include Tesla, Teladoc, Roku, Zoom, Coinbase, and Spotify. Although some of these stocks have suffered in the last year, these companies aim to bring revolution across different industries, which makes ARK an attractive choice for investors that are looking for a long-term and growth ETF. The fifth and final one on this list is the Spdr Sp 500 Trust, or SPY. SPY is the best recognized and the oldest listed ETF in the United States. It tracks the S&P 500 index, which includes the top 500 companies in the US and is one of the most commonly followed indices that represent the entire stock market. SPY is the largest ETF in the world right now with over $410 billion of assets under management, and it has a very small expense ratio of 0.09%. With an average daily volume of 100 million shares, it is also the most actively traded ETF. In 2021, this fund gained 27%, and historically, the S&P 500 has been considered to have outperformed majority of the active traders. Unlike VTI, this ETF only includes large cap companies, and as of February 2022, it has 507 holdings with Apple, Microsoft, Google, Amazon, and Tesla in their top 10. This ETF welcomes all types of investors, whether you are just getting started with investing or want to invest a large amount, or just want to set up a recurring portfolio. I personally am a huge fan of the S&P 500, and a portion of my paycheck goes straight into this fund. So let's recap. If you want to invest in technology and growth, you should go with Invesco Triple Q. If you want to invest in cutting-edge innovation and are comfortable with a little bit of risk and volatility, go with the ARK Innovation Etf. If you want to invest in old and stable companies that provide quarterly dividends, you should go with the Schwab Equity Dividend ETF. And if you want to invest in the entire stock market, including small, medium, and large caps, then VTI, or the Vanguard Total Stock Market Index, is your best bet. And finally, if you don't know what to invest in, then you can't go wrong by just investing in the S&P 500 or SPY. That's it for today's video, guys. If this was helpful, please consider hitting the like button so YouTube can show it to more people. We're a small team of 2 people, and our goal is to simplify finance, so we would really appreciate your support. Thank you for watching, and don't forget to subscribe for more content like this.